Let's expand the conversation once again. Bring in CNBC contributor Malcolm Ethridge of Capital Area Planning and Wealth Enhancement Group's Ayako Yoshioka. Wells Fargo's Chris Harvey, of course, is still with me. Aya, I'll go to you first. I mean, the consumer has also been hanging in there and continues to hang in there. How much is that a key to where we go in this market next?
It's definitely a key here, Scott. You know, I think this is why everybody's so laser focused on the labor market side of the things. As long as everybody's employed and you still have that income, you're able to spend. And so consumer spending can be okay. But once the labor side starts to weaken more so than we've seen, and it's been more gradual than anything else, you know, I think the economy can take that. I think anything that speeds up the unemployment rate and then the pace of unemployment, I think that's going to be more problematic. But then the Fed might step in because I think they're more focused on that side, at least for now.
Malcolm, we can take higher rates, can't we? To Leisman's point. All right, so, they backed up a little bit, but we're back to where we were. What's the big deal?
Yeah, I think that it is important to keep an eye on what's happening in the Treasury markets. I think that it frankly gives us a little bit more of a read on how long the housing market is going to stay frozen, because obviously there's a direct linkage there, and it's been very restricting for anyone who's been wanting to buy or refinance in that space. But I'm looking at what's happening right now, and I'm hearing what's coming from Walmart regarding the consumer, and I'm wondering if maybe there's not a broader trend happening that we're not paying enough attention to, and maybe we don't have enough data points to find out yet. But I'm wondering if the Sell America trade isn't more responsible for that spike in the 10-year, and maybe we're seeing investors from outside of the U.S. take some gains here now that things have come back to the year-to-date neutral point, let's call it, and maybe they're also selling out of those U.S. bonds, and we won't really know until we can look back a few more days at the trading activity.
Chris, what do you think about that?
So there is a question. Well, I would say during a lot of the stress, there was a question of confidence. There's a question of credibility. If you looked, real rates were really pushing nominal rates. And there was a question of, are people over-indexed to the U.S.? And I think all that combined to push rates up, and to some degree are still pushing it up. I would say right now it's a combination of, hey, we're reducing the probability of recession, but we're also worried about the credibility, the confidence, and part of that is the balance sheet and the deficit.
You worried about the confidence, if you want to play that one, of consumers? Being able to hang in there?
So, Scott, so I talked to a lot of our analysts, and our credit card analyst on Fandetti and I go back and forth all the time. Right now, if you look at some of the trends and some of the credit with the credit card companies, it's actually quite strong. You're not seeing weakness that you would expect, right? We're all looking for things on. Yes, the consumer is the linchpin, no doubt about it. But when we talked to our economics team and they're going out and they're visiting middle market players, hey, we still are holding on to our workers. We still can't find enough workers. We we combed through transcripts and we're looking for it and we can't find it. And for the most part, what people are saying is, yeah, you have one-offs where people are reducing exposure or reducing labor. But for the most part, people are comfortable where they are, or at some point they feel they need to hire more people.
Malcolm, we're not, none of these issues really suggest that we're suggestive of or ignoring issues that are still out there. I think we're all real about that. But it does appear that the fog has lifted from the roadway. We can see better out our windshields now. Doesn't that give us a little bit more road to travel before we maybe have to deal with some of the possible issues that crop up? We're 4% away, not even a little bit less than that, from a new high on the S&P.
Yeah, I agree. It certainly makes it a better Q2 for all those corporate CEOs who were trying to figure out whether they were going to give us two separate cases, whether one was in a recession and out of a recession, or one was tariffs at 145% and the other was something lower. But I do think that it's important to keep in mind that even tariffs coming from 145 down to 30 is still restrictive for a lot of Walmart suppliers. It's still restrictive for a lot of online retailers who might even be going out of business right now, and we can't see it yet because, again, those data points just aren't clear to us. So I think, to your point, we can feel a little bit better. It wasn't as feared. It wasn't as bad as feared because Trump did pivot a lot sooner than I even thought he potentially would. But it's definitely not, the road is completely clear for us here. We'll know that once we dig into Q2 numbers and really get a chance to understand how much damage has already been done underneath the surface.
Malcolm, you're the shareholder. What do you think?
slide we've seen, something like 8% in Apple shares since Inauguration Day, includes a $90 billion planned buyback by Apple, right? Something like $25 billion or so has already been executed, so it could be a lot worse. But I think that Tim Cook will do a very good job of getting the messaging out there and making sure to put out some press releases that are enough red meat to satisfy the fact that, you know, manufacturing is being done here in America. I think only one or two of their PCs are manufactured here in the States right now. They're not going to move their flagship product out of Asia. It just doesn't make sense. But I think that Tim Cook will do enough and say enough and put out enough in the next few days to help just kind of calm things there and make sure that he stays out of the crosshairs.
Chris, NASDAQ's been killing it lately, right? This week alone up 6.5%. Does this trade back and back now in a big way?
So let's just talk hardware. We're underweight hardware. We've been underweight hardware. A lot of that is Apple, and there's a concern there. The AI trade, I think, is back, right? So can we just say all of tech is back? I don't think the answer is yes. A lot of tech back, the answer is yes.
Semis
right?
have been ripping,
Semis,
right?
Big part of the AI trade. I think it will continue. Maybe we take a pause here. But at the end of the day, as we were talking about, that AI Diffusion Act that's been diffused at this point in time was exceptionally important. And what Jensen was saying about, you know, our exporting is we want U.S. technology to be the standard. In order to do that, we need to export some of this technology to the rest of the world so it does become the standard, and we do have that advantage. And if we don't, somebody else will step in, and that's really important.
I see a headline, too, moving, Malcolm, and I don't think you own Meta. At least I don't have it in front of me, so I don't think you do. That the Wall Street Journal is reporting that Meta is going to delay the rollout of its flagship AI model, Behemoth. I bring it up because we're literally having a conversation before we went to Eamon in D.C. about whether this AI trade is back. The issue for some is it just doesn't remain on schedule.
Yeah, I'm a little bit surprised to hear that there's going to be a delay, especially because Mark Zuckerberg has basically raised the stakes as of their last earnings to let us know they were going to dump another $7 billion into infrastructure related to developing AI. But I will say that the stakes are very high for companies with these rollouts. We saw that with Apple Intelligence and the disappointment in how they managed to roll that out. And so maybe the focus there is we'd rather delay and launch a great product instead of falling flat on our face and launching something that wasn't ready for the market. So I'll give them the benefit of the doubt. They've been right this far. And so we'll just have to see when the product is ready, if it does meet expectations.
We'll watch it for the rest of the program, obviously. Down 2 2/3%. Looks like we're at the lows of the day for shares of Meta on this news. The market can be punishing, as we've learned, if it has expectations about your deliverables related to this great trade. And if they don't come, as I said, on schedule, you're going to be punished.
I think that's right. But when you're dealing with a new technology, you're always going to run into bumps and bruises. So to me, this is not unexpected. Things don't run like a Swiss watch when you have this new technology. So should the market punish it? Should it trade it down? Yeah, I think that makes sense. But longer term, Meta seems to be in the right spot in the AI trade, and it seems to be a pretty big winner.
Right, you get a headline or a comment from an Eddie Q, for example, of Apple, as we did a week ago, and you saw what happened to Alphabet shares really immediately following that. So we'll keep following this story for you, try and get more on it, but there is Meta. Lows of the day, 2 1/4% down. Malcolm, thank you. Chris Harvey, thanks to you. And Aya, we'll talk to you soon.